All right, welcome to ABA Virtual Office Hours, Cryptocurrency Basics, sponsored by the American Bar Association and nonprofit AccessLex Institute. The Virtual Office Hours series connects you with experts to help you thrive as a law student and prepare for life after law school. We're really excited to have Derek Brand join us again this session, and he's going to provide an introduction to cryptocurrencies and what you need to know about them as both transaction mediums and volatile investment vehicles. Derek Brainard is the National Director of Financial Education at the AccessLex Center for Education and Financial Capability. He has worked in both the private financial services sector as a licensed financial advisor and in higher education as financial literacy coordinator at Syracuse University. His financial writing and commentary has been featured in Wall Street Journal, U.S. News and World Report, NBC News, and USA Today. Derek, we'll turn things over to you.
Excellent. Thank you so much. And welcome everyone to this session on cryptocurrency basics. Always love speaking as part of these virtual office hours. And I know we enjoy this continued partnership serving you in partnership with the ABA. So a privilege and pleasure to be here as always. And as Tracy mentioned, I'm with AccessLex Institute, and we're a nonprofit organization really focused on increasing the access, affordability, and value of legal education for law students from all across the country. And one of the primary ways we do that is through the Max by AccessLex program. It's the personal finance program for law students in most of the ABA accredited law schools across the country. So if you're at a law school that offers Max, you're in very good company, along with the thousands of other students who are utilizing that program for free online personal finance courses, free live events led by our team of accredited financial counselors, and free one-on-one financial coaching with our team. Again, all that is available to you through the education network at AccessLex, and you can access your portal there via the URL askedna.accesslex.org. So take some time, sign in if you haven't signed in a while, register for your free account if you haven't done so yet, and explore everything that we have to offer for you. Okay, because we're talking about cryptocurrency here today and money in general, we always like to say that the resources provided via AccessLex Institute are for informational purposes only. Although designed to assist you in developing your financial strategy, these resources are not intended as investment, tax, or legal advice. So just consider whether the information is appropriate for you, and where applicable, seek individualized advice from a professional advisor. So I'm going to give a quick overview of cryptocurrency here. And this is by no means a deep dive or a sophisticated look at what is a very complex and complicated vehicle in cryptocurrency. But what I want to do for the next just few minutes together is give you all an idea of what cryptocurrency is. Um, when we use the term cryptocurrency, usually it's synonymous with Bitcoin, because Bitcoin is by far the largest and most widely used cryptocurrency in existence, although there are thousands of cryptocurrencies in circulation. Um, I want to give you a general awareness of the technology that underlies many cryptocurrencies in blockchain. We want to talk about the process of how cryptocurrencies being created, quote unquote, via a process called mining. And then we'll talk briefly about the pros and cons, the advantages and disadvantages of cryptocurrency in the market, and legal and tax issues that cryptocurrency is up against, and maybe ways that will translate into future adoption of cryptocurrency, either as a currency and or as an investment. There's this, the conversation is it a functional currency? Is it an investment that we can count on? And while it's still early days, right, still a very early and young vehicle, we have some data that we can look at to see how volatile cryptocurrency is when compared to other more traditional types of investments. So let's jump right in. Cryptocurrency is a digital or virtual currency secured by cryptography and based on a network that is distributed across a large number of computers or nodes. So when you think about it, and that's obviously why it's named cryptocurrency, because it is secured by cryptography. Um, this decentralized nature of cryptocurrency allows cryptos to exist outside control of government and other financial institutions and central authorities. In fact, that's why cryptocurrency was created in the first place. If you trace it all the way back to 2008, 2009 financial crisis, a tremendous fracture of trust in centralized financial institutions led to an entity known as Satoshi Nakamoto coming up with the Genesis block, and this idea of Bitcoin as an alternative currency to what we had traditionally been doing, working through these institutions. And so the decentralized nature of cryptocurrency is its appeal. But the technology that underlies it in blockchain, some experts believe that that piece is actually more disruptive and and can have a more immediate, tangible impact on industries than cryptocurrency itself. Um, we'll talk more about blockchain in just a second, but just again, just to let you know what it is, think of it as a coin or a token. That's usually what individual cryptocurrencies are referred to as coins, tokens, depending on how they're used, whether they're being used to access certain services online, whether they're being used as a store of value, um, whether they're the cryptocurrency exchanges, proprietary token. These are all uses, right? And some are used in specific software programs, such as games and financial products. And so cryptocurrencies can be used and put into circulation for various reasons, which kind of also adds a little bit to the complexity of them, right? Let's look at the top 10 cryptos by market capitalization. And what we mean by market capitalization, just as in stocks, when you have the price of one unit of cryptocurrency multiplied by the number of units in circulation. That's how you come up with that market capitalization. And as you can see from the chart here, Bitcoin is by far the largest. Globally, 457 billion as of this chart, which I pulled just a few days ago. And as you can see, that's more than double the second largest cryptocurrency in circulation in Ethereum. Although, again, Bitcoin and Ethereum are the two largest by far when you stack them up against the rest of the top 10 here. And you can see that it goes down substantially from even the top 5. And so the bottom 5 of the top 10 usually rotate sometimes weekly based on investor sentiment, based on what's happening in the news, based on other macroeconomic trends, what the Federal Reserve does with interest rates, whether they're signaling that they're going to be less hawkish, and therefore that has a positive impact on the stock market. And when people feel like they can move from less safe investments to a little bit more risky investments for a potentially higher return, that's where you see kind of cryptocurrencies and these types of investments really start to increase in their value as well, because you have inflows of cash versus times of high inflation and money tightening policy, where you see outflows of cash from risky investments into more safe into investments that are perceived to be safer. We saw recently a crypto winter, they call it, because of that very phenomenon. And we've been obviously in a high inflationary environment for the last several months. And so cryptocurrencies have taken a large hit in their market capitalization, up from over $3 trillion globally in market cap to less than $1 trillion, to just put it into perspective. And that all happened within the span of a few months. So these types of vehicles absolutely swing wildly in their value, which leads to their risk and their price volatility. Blockchain technology. Now I show you those. That's the top 10. Remember, there's over 22,000 cryptocurrencies out there. Most more than 22,000 that are traded publicly. Um, so, you look at in most of them what we call altcoins, right? Or alternatives to Bitcoin. Like I said, Bitcoin and cryptocurrency almost is used synonymously in many cases, but any other coin, alternate coin, are referred to as altcoins, and there are many in existence. So, you have to be careful with, especially the newer startup coins, as well as even the ones that have been around for a little while, because a lot of them are not pegged to a an actual fiat currency or any other sort of stable store of value. They'll come and go and rise and fall based on the whims of investor sentiment, which can be impacted by things like celebrity uh, behaviors, celebrity statements. You think of Elon Musk and Dogecoin, for example. They can be impacted by, entertainment, Netflix shows, right? Memes, literally. So, so this is what we're dealing with here. These tokens that largely get their value um, purely from demand and not much else. So that leads to some of its volatility. But the blockchain that is underneath all of it is really one of the most stable and tangible value propositions that cryptocurrencies have brought to bear. Um, the blockchain is a digital database or a ledger that's distributed among the nodes of a peer-to-peer network. And groups of recorded transactions with a cryptocurrency are organized into blocks, and as new data enters, each block is connected to the next via, again, complex cryptography. So for a new block of data to be appended to the existing chain, all the previous transactions and all the previous blocks must also be verified, and there must be a consensus that all is right within that chain before a new block is added. Now, as you can imagine, that takes a lot of power, that takes a lot of computing power. And to add that new block, to mine that data and to verify all the pre-existing data, takes a massive amount of computing power. And so this is one of the criticisms of Bitcoin mining. The process of verifying transactions on the blockchain by solving mathematical puzzles, for which miners are rewarded with new Bitcoin. This is how new Bitcoin gets put into circulation, when miners actually verify transactions, create new blocks. And so this takes a lot of power. This takes a lot of energy. And so that's one of the criticisms inherent with Bitcoin specifically. Some other altcoins are a little bit more efficient and streamlined than Bitcoin, but again, Bitcoin is the largest player and has been. So that criticism remains. So let's think about some advantages and disadvantages of cryptocurrency while we're here. Obviously, the advantages is that it's decentralized, and so there's not a single point of failure of collapse like we saw in the 2008-2009 financial crisis. When we had the subprime mortgages, we had that trickle through to collateralized mortgage obligations, and we had when people started defaulting on their mortgages, and now everybody that owns these investments also felt it. So that single point of failure doesn't exist in cryptocurrency because of its decentralization. It also lends itself to cheaper, faster money transfers peer to peer. Disadvantages, of course, price volatility, as I already discussed, high energy consumption for mining activities, as I already discussed, use in illicit activities because it's unregulated. That is another disadvantage inherent with crypto. Um, so so these are all kind of on their face, some of the surface level advantages and disadvantages. Of course there are far more, right? Cryptocurrency projects, many and most of those, several thousand cryptocurrency projects out there are untested. Blockchain technology in general, although the idea and technology is sound, has yet to gain widespread adoption. Short-term crypto investors, there's a lot of risks because price changes rapidly. And the allure of reading in the news that so many people have made so much money off of quick surges draws uninformed and possibly unprepared investors into the realm of crypto trading when they may not be ready, and they may be using money that they can't actually lose. And so that's one of the disadvantages, the ease of access to cryptocurrencies now via platforms like, apps on your phone make it also a risky trading vehicle. Um, and one of the things we think about with this is that the you know, investing versus trading is the concept that I want to kind of press here. Traditional trading vehicles like stocks, bonds, mutual funds certainly have price volatility. And what I mean by that is how far they swing from their from a standard distribution. How far from that medium does something swing generally? And the farther the swing, the wider the swing, the more volatile it is. Well, if you look at this chart of the S&P 500, which is 500 of the largest publicly traded stocks in the country, this is over the last few years. Um, you will see in the orange the S&P 500. That's that index that we follow just to see how the general market is doing over time. You'll see it goes up and down. Absolutely, it does. But it stays within this sort of standard mean here of the standard distribution of a little less than 20% up to at its lowest a little less than 20% negative month to month change. So you see that and you say, okay, but on average it's returned, it's returned over the last 30 to 40 years a little less than 10% before inflation. Okay, so but still they're stocks, it's 500 stocks in an index, and so they're going to go up and down, right? It's not a completely smooth ride. um, but when you compare it to these to unregulated uh, investments, such as cryptocurrencies, such as Bitcoin and altcoins, you'll see the volatility is just exponentially more. Okay, so we looked at the top two here, Bitcoin and Ethereum, and you can just see it's a much wilder ride, and that can be seen just as I said in the last few months. Uh, I think last fall, Bitcoin was trading at around $60,000 for one Bitcoin. $60,000 for one Bitcoin. Obviously, you don't need $60,000 to buy a Bitcoin. You can buy fractional like Bitcoins through the coin exchanges, but that's the value of one actual whole Bitcoin as of, again, recent history. Since then, the value of Bitcoin, because of inflation and the crypto winter, had fallen to less than $20,000, and I think today it sits around $20,000 for one Bitcoin, down from 60. But even in the last few days, because of news from the Federal Reserve potentially decelerating their interest rate increases, this is seen as a good move. People are feeling good about it. The value of Bitcoin surged 40% in just a day or two. So it's these wild swings, right? You have to be able to, and that's why that's why I largely look at Bitcoin and coins in general as a trading vehicles. They are actively traded vehicles. They're not necessarily those buy and hold long-term investments that we see in traditional investing. Because you really have to be on your toes. You have to know what you're doing. You have to have the time, the energy, and the wherewithal to commit to trading these if you're trying to make money off of them in a tangible way. And if you don't have those things, time, energy, and money, then cryptocurrency probably isn't necessarily the best investment to be dabbling in, especially not for the majority of your money, right? Okay, so legal and tax issues. Adoption and regulation of cryptocurrencies differ by country, absolutely. I think there are only currently 2 countries in the world that treat cryptocurrency as legal tender. Um, but the vast majority do not, and they're still trying to wrap their minds around in their legislation around how to treat cryptocurrencies in general. Um, the United States government, the current administration, had put out a plan to research cryptocurrencies, what it would mean for the Federal Reserve to develop a central bank digital currency, CBDC, and basically a digital version of the dollar. And is that something that is worth doing? And what impact would that have on the economy and our credit economy that we live in? So there's and then kind of what role the United States should play globally in the administration and regulation of cryptocurrency, because the United States being seen as a world leader, uh, taking that sort of lead on how to use this, on how to use and approach cryptocurrency is a big question that is being researched and asked right now by the administration. So the jury's still out on how cryptocurrency will be adopted in any formal capacity, if and when in the United States. We do not know, but it is a question that's on the table and being discussed. Um, Cryptocurrencies differ from traditional currencies as there's no requirement that they be accepted as legal tender. They're not backed by the government like the US dollar. And that's a problem, right? If you want to, so cryptocurrency is a little bit of a misnomer if the actual coin is not accepted as legal tender in any wide scale way. To be a form of currency, it has to have a stable value, which we just saw it doesn't. There are stable coins that peg their value to a US dollar, but the majority of altcoins don't. Um, so not a stable store of value, and not a generally accepted, widespread adopted method of exchange. So there's a couple huge barriers between cryptocurrency becoming any sort of legal tender. Um, Also, there's tax implications here, and that the IRS views cryptocurrencies currently as property rather than currency. So it's no different than if you buy a stock. That stock goes up in value, you sell the stock and you pay capital gains tax on the growth. It's the same type of thing right now with cryptocurrencies. So they're not even viewed as currencies in the eyes of the IRS. So that's just another kind of interesting point. And then unregulated as an investment, right? Um, so until we have some regulation, there's going to be minimal protection for investors. So even for these to be considered serious investments that you would want to integrate more in a thoughtful portfolio, uh, having any significant exposure to cryptocurrencies above 5 to 10% of your serious investing money, um, you'd be taking on a lot of risk uh, for what we've seen as no track record of kind of a consistent average return. So unregulated as an investment, although there has been recently exchange traded funds that have emerged that support blockchain technology and crypto indirectly, and those exchange traded funds invest in companies that do that. So those are ways that you can have exposure to cryptocurrency without owning cryptocurrency outright, or these new exchange traded funds that you can buy and that are regulated investments, and therefore enjoy some of the protections for retail investors that other investments do, along with SIPC insurance protection if they're at a brokerage firm. So there's a couple big questions on the legal and tax issues going on right now with cryptocurrency, and there's a lot of questions on whether investors trust the cryptocurrency industry in general right now, with the recent collapse of cryptocurrency exchange FTX and the large, almost catastrophic impact that had on the value of Bitcoin and Ethereum, the two biggest coins in circulation. So those are some of the legal and tax issues. But going back again, this is a very high level overview of cryptocurrency here, for just so you can kind of start to understand the lingo and the general concepts at play in terms of what cryptocurrency is. The pros and cons, advantages and disadvantages of the crypto legal and tax issues. So hopefully that, very quick explanation has been helpful for you all, and I'm happy to take any questions that you might have about that.
So Derek, when you were talking about Bitcoin as currency, can you mention which two countries do accept Bitcoin as currency?
Yeah, I think it's I believe it's El Salvador and Central Africa Republic, if I'm not mistaken. I would have to look it up to confirm, but I believe those are the two.
Okay, great.
Yeah.
If you have any other questions for Derek, drop them in the Q&A component here.
And here's the deal is, I talked about a lot of concepts here that you may say, well, that's all good to know, but what if I want to try it with 15 bucks, right? And the good news is you definitely can, right? You definitely can, by logging onto a crypto exchange. They're out there. Coinbase is one. Uniswap is a decentralized exchange. Even on Robinhood, you can buy cryptocurrencies with very little cash. My only, if it's something that you're looking to try, just to see how it goes, this is the type of thing where, when I've purchased cryptocurrencies in the past, I would treat it the same way I would treat the money I was taking to the casino, because you just don't know what it's going to do. And it certainly is not a substantial or significant part of my retirement portfolio, because it's not proven in the same way and it's not regulated in the same way. So from the practical level, it absolutely is accessible. And that is just kind of the lens that maybe you want to go into it as a learning experience and not necessarily a serious investing experience, especially if you're, a full-time student or just starting out in investing. This is not the same thing. This is trading. And it's something that you want to just go in with both eyes wide open. And to that end, I forgot to mention, we do have free financial coaching, even if you're not at a max school and you want to talk more about investing in general. I didn't talk a lot about traditional investing in this session, but we do have a lot of great information and educational resources for investing long-term using mutual funds, index funds, stocks, bonds, and retirement accounts, that sort of thing. Sign in through Max for that coaching, but also through accesslex.org/accessconnects.
Great. Well, thank you. I think that's all the time that we have today. But we want to thank everyone for joining us, and a special thank you to Derek Brainard. Thank you so much for introducing us to cryptocurrency. And as another thank you to AccessLex Institute. We hope that you'll visit the ABA website for a wealth of law school advice, career advice, and networking opportunities. Take care, everyone.